Okay, so what are going to be the incentives for 2010? Well, first-time home buyer tax credit, but it ends on June 30th. You have to have a contract by, anybody know? April 30th. Does anybody know how they're going to track that? Earnest money cash? And really, it's an IRS deal, right? Nothing we can. I don't know how they're going to do that. Existing home buyer tax credit, June 30th also, have to have a contract by April 30th. Feds are going to keep buying mortgage-backed securities. I think that one of the incentives is going to be that they're really going to start talking about that it's about to end. And remember earlier I said that the Fed's part of the demand for September was over 80%. Think about when that goes away. It's like a beach ball being held underwater. Rental rates are on commercial financing. I think rental rates are going to rise because commercial financing on the construction side is dried up. It's almost non-existent right now. Any new stuff you see being built right now already had financing in place. We have about 40,000 people a year move into the Austin area. People are graduating from school. People are graduating from high school. They need places to live. The existing amount of inventory, in my belief, is going to be used up here in the next couple of years. I think rental rates are going to rise because of that. Right now, there's still plenty of apartments out there, but there's no more new ones being built. Same thing with the condo market downtown. It's going to be 4 years before any new condos are going to be built again downtown. So I think that our rental rates are going to go up here over the next couple of years. That's an incentive to buy, by the way. You know, if you can buy cheaper than you can rent, it's a big incentive. There's also going to be incentives not to buy. I think life is full of incentives. Economics is all about incentives. Declining values and upper price ranges are going to continue, I think, through the first part of this year, of next year. I think rental rates are going to stay lower in those price brackets. I think the market news is not going to be good when it comes to jobs until third or fourth quarter of next year. So remember we were talking about jobs, that's where the housing market is. I think this is, you probably don't want to hear this, but we've already talked about the tightening of the lending process out there. I think the underwriting of mortgage loans is going to get even tighter out there. Lenders are, right now, they don't care if you have a 800 credit score. They really don't. They care about whether you can afford the house and what the collateral looks like. I would say 20% of the files that we do have to have an appraisal review nowadays, or a second appraisal done on it because of issues. It used to be on an appraisal, we could have 3 comps within the last 12 months to determine value. Guess what it is now? 3 comps in the last 90 days. Plus an existing listing to determine market direction, and if there is a foreclosure in the area, it has to be included in the appraisal. So they're very collateral conscious or focused. So I think that's going to get worse. I mean, should they be collateral conscious? Of course they should. I think third and fourth quarter we're going to see higher interest rates. I think this is one of the things we can take advantage of, though, as real estate professionals, as getting people off that fence. We need to educate them about what's about to happen to motivate people. I have so many people that we've taken loan apps on. Well, I'm going to wait for rates to hit 3.5%. They're not going to hit 3.5%. I'm going to wait for that $100,000 house to be worth 50. That's not going to happen. All the government-imposed incentives have been stealing those future sales, and they're all going to go away here pretty soon. Okay, so what to watch for? Okay, the Fed may or may not extend the buying of mortgage-backed securities. If they don't, it's like a beach ball being held underwater. As soon as they stop or announce the stopping of it at the exact date, you're going to see interest rates go from 4.875 or 7.75 today. They're going to jump at least a point. I think we're going to settle around in the 6.5 range. That's kind of my prediction. I've been wrong before. First-time homebuyer tax credit is going to expire June 30th. That's a big number, guys. April 30th. Think about what you want to do between now and March and April 30th. You got to get the ball rolling. Existing homebuyer tax credit is also going to be going away. January 1st, the new good faith estimate and HUD 1 starts too. I think it's going to be a little confusing for people out there. The good faith estimate that we know it now, our attorney called it a contract between you and the buyer now. It's a contract. So that should be interesting. This is what to expect. There's going to be some confusion about that. Loan officer license, there's a big one. by June 30th, I think it's July 30th, one of the two, every loan officer is going to have to be licensed by the state and the federal government in the Safe Licensing Act. It's a national licensing. I've already taken my test. Most of my loan officers have taken their test too. Jason passed his, so that's good. If you're not licensed, you're not going to be able to do loans anymore. They're going to track you on a nationwide basis, on a state level basis. Fannie and Freddie are already tracking loan officers on their default rate and their deficiency rates. Defaults means if something's gone to default. Deficiency means that it's gone 30 days late. They're tracking individual loan officers. They have a list. Freddie Mac actually already put out a list about it, of who's on their dirty list. If you get on the list, you're not going to be able to do loans anymore. FHA's already started to track loan officers on how well their loans perform too. If you get on FHA's bad list, loan officers won't be able to do lending anymore. So you're going to see loan officers more borrower conscious moving forward, I think, as they try to protect their jobs. This is just what I was talking about here. And by the way, they look back 2 to 3 years on these loans. So if any time in that first 2 to 3 years, if there's anything wrong with it, it goes to the underwriter gets tagged, the company gets tagged, and now the loan officer is going to get tagged for it. Lenders are still going to be collateral conscious. QC happy. QC is quality control. 2 years ago, I don't think QC even existed on mortgage loans at all. Smells good, okay, let's fund it. Nowadays, in fact, I just sent one of my loan officers to San Antonio today. Didn't I, Wendy? We had a loan that we let close. We sent his 4506. It was just a form from the IRS that we typically send before closing, but we didn't let this guy close. He closed. We sent the 4506 in. His tax returns hadn't showed filed yet, or filed the right way. And so the lender's not buying it from us now. We've already funded the loan, but it's sitting on our warehouse line now. We can't get it bought off for 2 months now. And we sent him down to the IRS office locally. They burned. It caught on fire. Right down the street here. So we had to send my loan officer to San Antonio today to get the IRS to fill out this form for us, which they wouldn't do after he spent the whole day down there. So now I can't get this $200,000 loan off my books because of quality control, because they're really QCing these files. They're QCing everything. We have to send forms into the Social Security Administration, to the IRS. We have to check everybody. They run this background check to see if you own any other properties, if you're married. I mean, you can't get by with anything anymore. Not that we ever tried to get by with anything. Lenders are looking at job stability and debt to income more closely than ever. Like I said, they don't care about your credit score. What they've learned over the last couple of years, if you have an 800 credit score and you lose your job, you're not going to make your mortgage payment. But if you have an 800 credit score and you have $100,000 in the bank and you put 20% down and you lose your job, you're going to find a way to make your mortgage payment. So everything being about the credit score like it used to be is out the window. It's all about collateral, and it's all about your debt to income ratio, and that's why you're seeing these numbers decline. LTV ratios. That's going to be the new buzzword going around. Everybody's going to be talking about. We're not going to see a true recovery in the housing market until jobs come back. So I think there's a good window in 2010 for us. And I've made a timeline on here. I think I'm almost there. HUD implements new guidelines. Jobs come back third or fourth quarter. Oh, by the way, on USDA loans, the 2010 census comes out in 2010. USDA will redraw their maps, like this gentleman say over here. Nothing in Austin will qualify. Any city that's above 25,000 people will no longer qualify. Pflugerville will be taken outside that, I'm sure. I think probably Hutto will. A lot of Hayes County is probably going to be taken out of that USDA range. So I think the census comes out in March or April, something like that. They probably won't redraw it for a couple months after that. Just remember that, though, that those are going away, and it's going to be even further outside of Austin. You'll be able to do USDA loans.